Very cool. Wow, what an amazing story. Yeah, so I'm curious, coming from the VC world and now you're in real estate, I hear VC makes really good money. Yes, there's a lot of risk, but when you hit a home run, and people always talk about the unicorns, right? How does investing as an LP differs from the VC world versus what we do here in real estate? And do you still invest in VC in startups as well, in addition to real estate?
Yeah, I do still invest in VC. I think I've made like maybe six or eight early stage investments. I've made some pre-IPO investments in Stripe and SpaceX and a couple companies like that. But I think what people don't realize is that more than 80% of funds fail to return investor capital in the VC space. So that's point one. Point two is that in the people who nail it and are crush it, they make money in years 8 through 15 of
Wow.
running a fund. So imagine you raise even just like a modest $10 million fund. Your first fund, maybe your first fund's a $2 or $5 million fund, but let's say a $10 million fund, right? You spend the first 3 or 4 years deploying all of that capital, and then those companies need to mature, right? They take 5 to 10 years before even some of them get to a larger size. And then, of course, those companies also need to exit. So in a typical portfolio, from my experience at Techstars, like five out of 10 will completely fail. Maybe three will return money, and two will be your home run winners. And it's really not easy to be a fund manager as when you're investing in VC. I'd also say that as I was doing my research to figure out if I wanted to go down this path in real estate, I also interviewed over 23 different capital raisers. And I asked them, hey, how long did it take you to make your first dollar? How much did you make your first year? What are the things that you wish you knew when you started? A bunch of those types of questions. And the common thing that came up was a very similar theme to venture capital, which was if you're going to go raise money for a value add project or a development, there is similarly, all that money is going into these deals in order to renovate them or build them. And so there's not a lot of cash flow where you're pulling a ton of management fees, or all of these things are back weighted, which heavily influenced my strategy towards focusing on debt funds.
Oh, it's a perfect lead into my next question between within real estate, investing in equity versus investing in debt. Share with everyone a little bit about the differences, the pros and cons of of those two investment vehicles.
I think if you're on this call, you probably know like equity, you probably know the differences between debt and equity, right? I think debt, you have ownership in something, you want that value to grow over time. Debt, it's fixed and you're getting some sort of interest on a monthly basis from that. And it's the first position, it's much safer. And I think when I got into this niche in 2021 is when we were right on the precipice of lowest interest rates of all time and interest rates driving up. And the number one thing that I saw was that people were raising money for all different types of deals. And I think the rule number one that I follow in this industry is I cannot lose investor capital. And to me, if you're new in this niche, it's shocking to see how many people like hop in and then start raising for someone else's deal, and they've never, maybe they've invested in one or two, some of them haven't even invested in an LP deal before. And to me it was like, okay, I've invested in over 23 different deals across all different types of asset classes. And I can tell you that the ones that were the most consistent and delivered on their actual promise, consistently, were these fixed income and debt funds. And I also thought that those were the easiest types of funds to vet. It's very easy to go and see an institutional quality fund that has a very high minimum and say, okay, how much did they distribute last month? How much did they distribute last year? How big is their firm? Who's these? Have they ever lost investor capital? They've been around for 20 years? Great. They've never produced less than double digit returns? Great. Very easy to go vet. And especially as the financial environment was changing, that felt like the strongest play for me to deliver on what I promised and never lose investor capital. So that greatly influenced how I approach investing and raising money today.
Gotcha. Very good. I love that. Obviously, different investors might have different goals, right? Some of them want that consistent income, especially if they're in the older age, and they much prefer security, consistent cash flow over appreciation and try to build their wealth quickly. So when with you focusing on debt funds, the way that you market and find your LPs, do you intentionally focus in on any specific sort of avatar or like profile of an investor so that way they will more likely invest into your fund versus trying to chase these 20-25% returns in these equity funds?
I can tell you it's all testing. So I'll take a step back. So the first thing that I'll say is my target market as of today are W-2 executives who are in their 50s, who are planning to retire in the next 5 or 10 years, and are not sophisticated in real estate. They've been in their career for 20 plus years. Maybe they have a rental property or two, but they're really not going. They don't want to be a GP. They've got their own career going on. They have a life. They have kids. They have a wife or a husband. And the first thing that everyone talks about is after you go raise money from friends and family, usually I hear that everyone struggles to get leads. How do I get more investors in my fund? Number one problem, talk to any capital raiser, that's what they say. And so I decided to focus there first. And when you think about that problem, what are you really trying to do? You are trying to build trust with investors at scale. And I thought the best way to do that would be an inbound strategy online. It aligns with, I feel like I'm a marketer at heart. I used to run an advertising agency, and I think it's a good way to reach people at scale and catch them when it's right for them. And one of the other problems that many investors come across is how much it costs to acquire a lead. And so my thesis, which is proving out to be true so far, is that how could I build an introductory offer where someone can come in, they can purchase a consulting or a training or a mentorship program from me, which allows me to cover the cost of acquiring the lead, and then a percentage of those people, I've built enough trust with them and I have the right funds or products that they need for their portfolio to upsell them into our other back end core offerings.